Hi friends, welcome back to CAP classes. In this video, we are going to discuss Accounting Standard 10 Property, Plant and Equipment. In our previous videos, we have covered definitions, we have covered scope, applicability and exceptions, we have covered measurement principles, we have covered recognition principles. In this video, we are going to discuss another very important principle given in Accounting Standard 10 Property, Plant and Equipment, and that is treatment of subsequent costs. There are three kinds of subsequent costs recognized in this accounting standard. And the first cost is day-to-day servicing. Second cost is a replacement of a component. Third subsequent cost is major inspection costs. What are they? One, day-to-day servicing. Second one is replacement of a component. And third one is major inspection costs. Let us discuss one by one. See, you purchased plant 4 years back. Now you are using the plant actively in your factory, but it needs repairs and maintenance daily. It needs preventive maintenance. It needs breakdown maintenance. It needs so much of cost to be incurred. So many materials are to be used, and some laborer or employees must look after the plant. So what should I do? Once the asset is recognized in my books of account, when the asset is purchased, if I am incurring day-to-day servicing cost, should I capitalize it? The answer is no. Accounting Standard 10 clearly said whatever the amount of day-to-day servicing is, they are in the nature of repairs and maintenance. There is no concept of capital repairs. It is only revenue repairs. So whatever the money you have spent towards this day-to-day servicing, treating it as repairs and maintenance, expense it off to your P&L. As simple as that. This is point number one. Point number two, replacement of component. This is one of the beautiful points I really loved in Accounting Standard 10, Property, Plant and Equipment, which was not there in the earlier standard. Now it is, see, let me give you one example. Say Indigo Airlines purchased one aircraft. Say they have spent 1000 crores and the life of this aeroplane is 10 years. Life of the aeroplane is 10 years, but they have interiors, they have seating arrangement, they have belts, they have everything inside that aeroplane, the life of which is just 2 years. So every 2 years, they need to change the seating arrangements and they need to change the interiors. So this interior is not coming with 10 years of life, but the aircraft is coming with 10 years of life. So this is what the standard says, replacement of a particular component. So if there is any component of the machine which is to be replaced, which has a distinctive separate life, when you are replacing the cost, the accounting standard said there are two steps. Step one, recognize the cost spent for replacement of the component. That means capitalize the amount what you are spending. Two, unamortized part of previous component which you replaced, the old seats, old components, de-recognize it. On this, if there is any loss, charge it to your profit and loss account. That's all. I repeat, if you are changing a component, if you are replacing a component, capitalize the new component, de-recognize the old component. If old component gives you a difference, that means a profit or a loss, it should be adjusted to your P&L. This is about the second part in the subsequent costs. Third one is a major difference between previous accounting standard and this accounting standard. Third one is major inspection expenses. Major inspection expenses. Regularly you may incur major inspection expenses. For example, you have a plant of 1000 crore rupees worth. You have a plant of 1000 crore rupees worth. When you started the plant, you thought every 3 years, 4 years, it needs major inspection. So you entered into a contract with Larsen & Toubro L&T so that the engineers from L&T will come once in every 3 years or 4 years. They inspect the whole machine and they give the report. And that ensures that the plant is in a working condition about, the efficiency of the machine, the continuity of the machine or the utility of the machine. You are sure because they have given you a report. So you are incurring some major inspection expenses. And the beauty of Accounting Standard 10 is, even if it is done on a regular basis, whatever the amount is, recognize major inspection expenses as a capital natured item, add it to the value of fixed asset, amortize it over that 3 or 4 years. I repeat, any major inspection expenses incurred for inspecting any property, plant or equipment must be capitalized. They are to be added to the value of machine. Now, the second step is very interesting and important. Sir, already previously I have done major inspection expenses. I capitalized it. I thought after 5 years I will go for second or subsequent this major inspection, and I am writing off that 10 crore rupees I have spent in my previous inspection for 5 years. So you thought the life of that inspection, the benefit of that inspection is 5 years and you are writing it off in 5 years. But now what happened? After 3 years you decided to go for another major inspection. So 2 years unamortized major inspection expenses of previous inspection are there in your fixed asset account now. Accounting standard 10 says capitalize major inspection expenses you have spent now and de-recognize previous major inspection expenses which are unamortized and which are included in your fixed assets previously. So if you observe, the replacement of component we have discussed in step 2 and major inspection expenses in step 3, both of them principle is same. Recognize the new one, de-recognize the old one. As simple as this. Recognize new component, de-recognize old component. Recognize new major inspection cost, de-recognize old inspection cost. So the summary of this video, we are discussing about subsequent cost incurred after purchasing the property, plant and equipment and after recognizing property, plant and equipment. Accounting standard 10 has given 3 types of subsequent costs. 1. Day-to-day servicing. 2. Replacement of a component. 3. Major inspection. 1. Day-to-day servicing, expense it off. Regular repairs and maintenance, write it off to your P&L. 2. Replacement of a component. Recognize the new component's value, de-recognize unamortized or undepreciated value of the old component. 3. Major inspection expenses. Capitalize major inspection expenses incurred now and de-recognize unamortized major inspection expenses previously you have added in your fixed asset. So this is the accounting treatment of subsequent cost in property, plant and equipment accounting standard 10. I hope you enjoyed watching this video. I hope this is useful to you. If you have any specific doubts, please write it in comments in this YouTube channel video. We will deal with that separately. If it requires another video, we'll do another video. If it requires explanation, I'll give you explanation in the comments. I hope you enjoyed this video. If you like this, please like it, share it and subscribe to our channel. So many useful videos are to follow. Thank you so much. Pawan Kumar signing off. Cap Classes.